have a look. Just pop this out. Just setting up the environment quickly. Definitely need 2 monitors. It's a little bit difficult. I'll just wait for a few people to join before I make a start. And we'll go over some Rune stuff first. Alright, I guess I get started. So first of all, I just want to quickly go over this information on Rune. There's been some recent developments. Mostly to do with the fact that we had a fake out to the upside and we trapped the longs, in which case we fell back into the pennant, which is generally not a good sign. We've realized a profit on, so the market makers have realized a profit on trapping these longs. So anyone that's over leveraged has probably gotten liquidated already, as we have not come back up to mitigate this area of liquidity. But we have used the bottom ascending trend line as support, which was one of the targets that I had last night. So anyone that took a long entry in there would have made at least a good 2.23%, depending on where you trailed your stop loss. But yeah, that was a nice little trade there. We're currently headed up to the 50. If we can get above the 50, then we've got this descending trend, top trend line as resistance. And obviously, if we break above this, then that's pretty bullish. And this whole move down was just yet another fake out to the bottom. But really, we're kind of yo-yoing between these EMAs. So there's also the 6-hour. So we've still got a clear crossover on the 6-hour, and we're backtesting the 13. I believe it's the 13 and the 5. Yeah, backtesting the 13 and the 5 as resistance, but we're holding the 50 quite strongly. And you can see here there's been a wick all the way down to the 200, and it pushed the candle right up above the 50, and then it closed on the 6-hour, which is really good, by the way. That's why we did a bit of a pump from the 50 upwards to the 5 and 13. Now I don't really see these particular EMAs as being all that strong, so if we do close, this would be considered a piercing line candle. In the next like 5 hours, we close anywhere near it or above it, that's engulfing. If we close halfway or above 50% of this previous candle, that'd be considered a piercing line candle, in which case would be bullish regardless, and we'd likely come up and test this 2.7 or the top of this trend line here. So yeah, that's pretty much it. If we do get rejected by this area and we come down, I would say the closest order block would be this one right here. So anywhere between 2.54 and 2.587. And you can obviously narrow that down on smaller time frame to get a more accurate reading. So this one here, the order block is right here before the huge pump to the upside. It's between 2.57 and 2.59. So generally, if you take an entry just above the previous low, so if we break this low, we come down and we mitigate this order block here, you can take another long entry, which is around the market 1 as support. You will likely get a scalp up to test this this ascending bottom trend line, which would be really good. The next level of support would be the 800, or between the 800 and the market 0, but generally it's the 800, or the daily low in the previous daily low, which is right here. So yeah, that's what I think. And obviously, if we break that, then we're coming down to collect this liquidity, and you would use anywhere pretty much between here and here as a type of entry. You can narrow it down, or you can by going higher in the time frame, you can get like I guess a more clear picture of where the order block is at. So like for example, when I clicked on the 6 hour, you can clearly see that there's an order block here because it rejected from here and moved up, as a whole bunch of liquidity moved in. Now, as you know, this is I believe a morning star, um, where it basically indicates a reversal where the two candles are preceded are quite bullish. But yeah, so you basically go here, you can see that there's a block of orders right here, some liquidity down here. You can pretty much just go back to the 1 hour, and you can see that you can narrow basically this down, and you come before that, I think. Yeah, so this white candle here, that would be where you take your entry from 2.3, anywhere from 2.3 to 2.38, or you can take it just above it, and then you can just play it as a scalp. And that's how you generally go into the trade. You generally go in thinking that your trade's not going to last very long, since the market maker does move quite quickly, and up and down. Even though it's a bias in a direction, it still moves. Like, it moves to liquidate, essentially. It moves to trap. Um, so yeah, so if we do break this level, expect it to come down to here, or at least here or here, and expect it to bounce up and either test the 50 or this trend line right here. Now, in terms of the TDI, we are getting a compression. Generally, a compression means that we're going to smash in a specific direction, like we're going to like either pump or we're going to dump. And I assume that this is being set up for the CPI in 3 days. And I will basically say in my stream, I'll probably do a late night stream after the CPI is done, and we get a fake out in a specific direction, which is generally what happens when we get this news. I'll probably do a stream like an hour later, and I'll be like, okay, so here's the directional bias. The numbers were maybe a little bit more than their normal sell, so the normal release. So Rune is likely to pump because of that, because inflation is obviously slowing down. Um, so yeah, so that would be a bullish sign, and in which case you would take along, and you would take along all the way up here, um, and all the way up to possibly the 800, which is 4.54. But you never know. So basically, if the CPI is coming a lot higher than expected, than the forecast, then we can expect a huge rejection of this EMA, in which case that would be a fantastic short opportunity, and this pennant here would have been a bearish pennant. So I assume that's why it's set up the way it is, because it's accounting for that news that's coming out in a couple days. But yeah, pay close attention to the TDI, or so this is basically just the Bollinger Bands and the relative strength index, and it just shows you where it is relative to whether or not it's oversold or overbought, and just how much the RSI is consolidating or compressing in comparison to the Bollinger. Um, but yeah, I can see that if the CPI numbers does come out a little bit, we are likely to flip the market base, or the market maker base, as support, and will expand upwards, basically creating an Bollinger expansion, and vice versa for higher than normal CPI numbers. But yeah, expect the market to move decisively. All right, so just 1 second. Just here we go. Just reporting this spammer. Just 1 second. There we go. Spammer gone. All right. Just grab some water. Okay. So moving on to BTC. Now this one's interesting. Alright, so BTC is also moving in a bit of a pennant, although it's not as structured as Rune's pennant. And we've got a couple of different, where is it? I think, is that it? No. Not that one. Let me just close these for a second. And I'll quickly just fix up these lines. Sorry about this. For some reason, my previous settings didn't save. This one. And the vectors off. 23. That's support. This is resistance. And 28 around here. Let me just turn off that as well. And this too. Alright, so we got a couple of things happening here. And first of all, I just want to go over the fact that CPI numbers will definitely impact the direction of BTC, and BTC is setting up for it. So we got a couple of different things. We've got a diamond reversal right here. So you could, if we do come up here, we can see a reversal back up to here to collect this liquidity, just right here. We can also see a broadening wedge. So if in the case that the CPI numbers are way higher than forecasted, then we can see a consolidation, a rejection from here, and then we can drop down, creating a new low, back tests, and then we can fall down lower, in which case we would see this channel play out from here. We can come down as low as here, maybe we make a new lower low, but expect us to drop abruptly if the CPI numbers are a lot worse than expected. And so we've got an ascending bearish channel right here, and we've got a broadening wedge, and we've got a level of resistance. So on the weekly, if you have a look here, if we close below this green line on the weekly in 16 hours, that's really bad. So that can also signal a reversal. Maybe we'll come all the way back down to here. Maybe we'll go even lower. So that would be bad for Rune as well, which would turn the pennant that Rune is currently consolidating in into a bearish pennant. But if we can close this weekly candle above this level of support, that would be a good sign. Technically, we would be able to then come back up and move, and test the top of this level of support. Now, if we do break above this level of resistance, if we do break above 23.8. So we come up here and we break above it, we would essentially be gearing up for a new higher high. And in which case, if we do break out of this for a third time and we continue going higher, it would invalidate this bearish structure and it would invalidate this bearish structure here, the bearish flag. So that would be really bullish. And in the case that we did close close a weekly candle above 23.8, I can see us going up to 28k. Now, I would be at this level, I'd be very careful. But if you can see that it's clearly moving higher, I would take a long position. I would close it right here because we do know that this is a major level of resistance. So this is a macro bearish line, macro bearish resistance. So if we do break this, I would be really considering that the bottom is in, and then the market is flipping bullish. But at the moment, those are the best trades that you can do based on just trade in the direction of the CPI numbers a couple hours after CPI releases. If we close the weekly anywhere above this line, then I would consider opening a long to 28. If we close anywhere below the green and the CPI numbers are far greater than than we've originally forecasted, and we close below this, I would expect this ascending wedge to play out and us to see lower levels, basically lower prices. Um, Come on. I've got to figure out how to block people on this stream. There's a spammer in chat and he keeps spamming. It's really annoying. Um, okay. So yeah, that's pretty much the update on that. I want to quickly go over an update on BTC dominance. Currently, it's in Rune's favor since when it drops, it reflects the strength leaving Bitcoin and all the money flow going into alts. This is just a reflection of that fact. So you've seen a lot of money leave BTC over the past half a month, really. Um, and we may see even lower prices as it comes down to fill these vectors. And in which case it would be very, very close to this level right here, which would be the extension measurement of the head and shoulders. Um, but yeah, so if we go out on the 10 hour, I think, we can see that this would be technically a lower low since the start of last year. Around the start of last year, it would be the lowest that it'd be in, which would technically be a type of alt season. But yeah, I would expect Rune to go parabolic or at least go make higher highs and reach higher levels if we do continue to go down. So at the moment it's just kind of like back testing the EMAs and um, what have you. There's very little difference between these charts and this chart, and technical analysis does still work on this as it's still just like a prediction of where the candles are likely to move next, and in which case it's been pretty accurate so far, as you can see. But yeah, so that's pretty much Rune, that's BTC, that's BTC dominance. I will cover Rune BTC when I learn a bit more about it. I'm still kind of learning and seeing how it kind of interacts with Rune and how Rune USDT and how Rune USDT interacts with Rune BTC. Um, so I will probably go into the Telegram and just ask some questions in regards to that, as well as just try to see how it correlates and whatnot. But yeah, so far I'm still liking the chances of it being bullish, especially since oil and everything's been been down, like it's gone down and stuff like that, and um, I'm seeing like a lot of money leave BTC and come into alts, which is really positive for Rune. I'm seeing CPI numbers, it's likely to come in a lot less than a lot less than what we had originally anticipated, or at least slightly more, which would still be bullish for the markets, especially traditional markets. But yeah, so those are my thoughts. If anyone has any questions, jump in the Telegram, or and feel free to ask any questions. Also, drop by the YouTube channel if you wanted to watch this for later, and just share your thoughts. Let me know how you're going. Let me know how your trades are doing. Just leave a comment, and that would mean a lot to me. Also, if you love this content, subscribe, like, follow me, put the notification bell on for this content. I do this 5 days a week. I will be improving my content over time, and there'll be a lot more structure. At the moment, I'm just new, so I'm still trying to learn and everything like that. But yeah, thank you so much for dropping by. I really appreciate it, and I hope you have a lovely day. Take care.